Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, starting the week, the Australian dollar had gapped higher and now remains mixed as traders look ahead to the key central bank meetings. Softer employment, slower growth and easing inflation has reduced expectations of a further RBA tightening. However, with markets fully pricing in no change this week, eyes will be on the US Federal Reserve as well, which could also add much volatility. Out of the two, I would still keep an eye on the statement to get more guidance on how the RBA and also the US Federal Reserve views interest rates, especially with new Fed Chairman Kevin Walsh at his first meeting as chair. However, any hawkish shift in the Federal Reserve's forecast could support the US dollar and weigh on the Australian dollar. Although technically, though, the market has improved only for the RSI, a ranging market for the ADX, and still a bearish MACD does give some concern. The market could pull back and see a little bit of weakness to the start of the week. Turning to the euro, also opened on a firmer footing as optimism surrounding the potential US-Iran peace agreement weighed on the US dollar. Support also comes from last week's ECB rate hike, though attention is shifting rapidly to the US. Let's see how that unfolds when the Fed meets. Looking from a technical point, though, I still feel that there is a little bit of mixed outlook here that could see the market turn and fill the gap and ease lower towards a region of 115 and reassess from there. The dollar yen, well, after that heavy bearishness, the market is still trying to recover, but I'm still feeling that there is still risk into the fact that we could see another heavy downturn. All eyes will be on the Bank of Japan this week, which is expected to deliver a 25 base point rate hike from 0.75 to 1%. Although the rate differential still favors the US dollar, any hawkish shift from the BOJ could spark a sharp reaction. Still seeing a cap around 161. Let's see if the market can break down and, like before, weigh and trigger stops. Looking at sterling, the market is also a little bit mixed here. And I do feel the downside is still vulnerable, but the technicals are improving. Unless we see a firm rally, then I'm looking back to the bottom side, somewhere around the region of 133 and reassess. Wrapping up with commodities, well, the gold has broken higher as all eyes look towards the US and Iran agreement to a peace framework, easing concerns over energy-driven inflation and reducing expectations of further Federal Reserve tightening. Overall, though, let's see how the market unfolds. We could still see a cap that is around 4,400 mark, and the risk still could see a little bit of pressure to the downside. When we turn to oil, the market is also weighing on the downside as it crushes the level of $84 a barrel and now looks towards 78.5. I've been neutral for some time here due to the risk of the overseas concerns, but the technicals are somewhat bearish. Let's see how it plays into this week. First support seen around 77.60 and reassess from there. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report. Hope you enjoyed a great start to the new week.